Be Wealthy and Smart, episode 1046.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about Amazon's stock split that happened, because yes, the stock split happened today, where Amazon had a 20-for-1 stock split, and as a result, the shares were up about 4% in early trading. Now, we all know that a stock split doesn't change the fundamentals or improve the prospects for business, but that it does tend to promote a lower price that is more accessible to retail investors. So it does tend to boost the price before or after or both during a stock split time period. And according to data analysis by the Chicago Board Options Exchange, volume in mega cap equities initially spiked 342% the week immediately after the split. So stock splits do attract attention from additional retail investors, and that's what we're seeing here. Now, what's also interesting is that Amazon's not just doing a stock split, but they're also pursuing a $10 billion share buyback program. Previously, they had a $5 billion share buyback program authorized in 2016. So the company is actually going to buy back $10 billion worth of Amazon shares. And of course, the company buying back the shares helps to put a little bit of a floor under the price, because I imagine they'll buy on the dips, and every time the price goes down a little bit, they'll implement their buyback program, or they could also be doing it at regular intervals. I don't know exactly, but I would imagine if they have flexibility, they'll buy the dips. And so that is incredibly helpful. Also, a year after a stock split, usually I believe the price is up an average of 16%. So a year from now, we may see a nice gain in the price of Amazon, although we can't guarantee that. And while we were investing in Amazon pre-split, we've also been investing in Tesla and in Google pre-split. So investors of record on May 27th, 2022 will receive 19 additional shares for every one held. And on Friday, the closing price was $2,440. So Amazon stock will have a fair value estimate of $192.50 per share following the 20-for-1 stock split. This is the first move for Amazon in more than 2 decades, and the biggest in the company's history. As of June 1st, the company was considered 37% undervalued, according to Morningstar, and they consider Amazon to be a wide moat stock, which means it has a durable competitive advantage. As you recall, Warren Buffett used to say he likes to invest in companies that have a wide moat, which means it makes it very difficult for other companies to compete with them, because they're so unique, or they have a competitive advantage, or they have a way that they do things that is hard for other companies to emulate. That's certainly true for Amazon, who's grown into this huge behemoth of online retail. According to Morningstar senior analyst Dan Romanoff, he said, over the long term, we expect e-commerce to continue to take share from brick-and-mortar retailers. We further expect Amazon to gain share online. Critical growth drivers over the medium term will be AWS and advertising. Since these segments earn materially higher margins than the rest of the business, we also expect them to drive margins higher over time. So that's great, because when you're talking about higher margins, that means you're getting bigger profits. And Amazon AWS is Amazon Web Services. That provides on-demand cloud computing platforms. And these cloud computing web services provide distributed computing processing capacity and software tools via AWS server farms. So that's an extremely profitable part of Amazon. That plus their advertising are really increasing their margins, and bringing it to the bottom line. Amazon is so much more than just a retail products company. And by those two categories being something that provides wide margins for them, we can really see how diversified the company is. Cloud computing is such a high growth area, and for Amazon to have an important part of their business in cloud computing means that they're in one of the fastest growing sectors that is possible. According to consultants Gartner Group, worldwide end-user spending on public cloud services is forecast to grow 20.4% in 2022 to a total $494.7 billion, up from $410.9 billion in 2021. In 2023, end-user spending is expected to reach nearly $600 billion. So I think this provides a good entry point for Amazon, but do your own research. Don't take this as investment advice. It's certainly become a more affordable stock for people now, so that's something you consider post-split if you missed purchasing prior to the date of record. Again, other splits coming up include Google and Tesla, so if you want to invest in a company pre-split, those opportunities are still available. But again, listen to the podcast that I did about that. There's pros and cons. You shouldn't just invest in a company because it's splitting. If you've been waiting for the audiobook, 3 Steps to Quantum Wealth is available on Audible. Just go to the Amazon.com website. There's a link in the show notes that'll get you there, and you can pick up the audiobook. Also, we did reprint the physical book in larger print, so we did listen to your recommendations and make that print larger now. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.